Okay, so why do I think Ethereum and crypto is positioned to actually have a bull market? It's really because it represents the future of money. Elon Musk said the system won't use dollars as a currency in the future. It's just massive energy. He was referring to basically compute and building compute in space, but this point is correct that what is scarce in the future is going to be compute and energy. And yesterday, LinkedIn's founder Reid Hoffman even said crypto becomes critical in an AI world, and he actually didn't think it'd ever be quoted by Kalshi. And Mark Andreessen says the grand unification of AI and crypto agents are going to need money. And even Larry Fink, who I saw at Milken, the Milken Institute conference this past week, he says he believes a new asset class is going to be buying futures of compute.
If you found this helpful, please like, subscribe, and turn on notifications for more insights into the digital asset space. Your support boosts the algorithm and helps this channel grow immensely. Drop your thoughts in the comments below. Thanks for watching and enjoy the rest of the video. The question everyone asks is Ethereum cheap at $2,300? According to the experts, the answer is a resounding yes. Valuation in crypto often comes down to the ETH-BTC ratio. Historically, the long-term average for this ratio sits around 0.048, with a 2021 high of 0.87. If we project Bitcoin toward its fair value of $250,000, a target shared by many institutional desks, and apply that 2021 high ratio, Ethereum's price target lands at $22,000. Currently, we are in the crypto spring, a phase where assets move reflexively and consolidate. Ethereum has been consolidating for 5 years. History shows us that these periods of sideways movement are usually the launch pads for parabolic runs. The first major consolidation ended in a 227x gain. The second resulted in a 54x. Even a conservative estimate for this third cycle fueled by institutional interest puts us at a 25x move from current levels.
Since the war started, crypto actually has been the best performing assets. You can see Ethereum is the best performing asset since the start of the Iran war. Okay, and the trends have turned positive. In fact, John Bollinger yesterday said his trend model turned positive and he now has a full position in Bitcoin. All right, so you might be so burned out because of the last crypto winter that you decided to give up on crypto. But keep in mind, crypto has been a huge diversifier. Okay, so I want to go back 10 years and say, if you had zero exposure to Ethereum 10 years ago, and you just bought the S&P, you'd have $229,000. That's the first row there. And that's starting with 100,000. If you bought just 1% of your portfolio into Ethereum 10 years ago, your total portfolio would be worth $520,000. So you doubled your total portfolio by adding 1% to Ethereum. By the way, if you added 5%, which is the third row, you can see that your portfolio would be worth 1.7 million, basically 8 times your return. So crypto's been a huge diversifier when you think about 10-year cycles. And it's a great hedge, because another way to think of this is to say, how much of another asset do you need to own to absorb a 50% loss in the S&P 500? For Ethereum, if you had a 0.4% exposure, you would actually completely offset a catastrophe in your equity holdings. If you had to do this with gold, you would need to have 37% of your portfolio in gold. So again, Ethereum has provided the same hedge protection for 1/100th the exposure. So as we think about Ethereum's price, I do think it all comes down to what Bitcoin does. So here's Ethereum's price ratio. I think the long-term average is the number just to think about, which is 0.048, and the 2021 high of 0.087. If I lay that to where we think Bitcoin fair value should be, which is around 250,000, the 2021 high average, for instance, would get you to 22,000 Ethereum. So at the current price of 2,300 Ethereum's cheap. And of course, as you can see, in crypto spring, in the early part of a cycle, Ethereum doesn't really move reflexively. So I think you're gonna have plenty of time to buy crypto over the next few months. But again, if crypto winter has ended, by the end of this year, we're gonna see some strong moves, just like we've been seeing memory stocks currently. And Ethereum's exiting along consolidation. It's currently 2,300, but you can see it's been consolidating for 5 years. The first consolidation ended with Ethereum making a 227x. The second consolidation that happened in Ethereum ended with a 54x. So I think this third consolidation is going to be pulled up because of tokenization and agentic AI. And maybe Ethereum's at 25x from here. Okay, so why do I think Ethereum and crypto is positioned to actually have a bull market? It's really because it represents the future of money. Elon Musk said the system won't use dollars as a currency in the future. It's just massive energy. He was referring to basically compute and building compute in space, but this point is correct that what is scarce in the future is going to be compute and energy. And yesterday, LinkedIn's founder Reid Hoffman even said crypto becomes critical in an AI world, and he actually didn't think it'd ever be quoted by Kalshi. And Mark Andreessen says the grand unification of AI and crypto agents are going to need money. And even Larry Fink, who I saw at Milken, the Milken Institute conference this past week, he says he believes a new asset class is going to be buying futures of compute. Well, already a lot's happened with tokenization. Stablecoin volumes, and this is from Bitwise, have now exceeded Visa payments. So we already know we're past the point of critical mass. And Grayscale had a nice report where they're projecting tokenization's essentially going to be a $300 trillion market. Now, up until this point, the value of the layer 1, the L1, was equal to the size of the tokenized market. Okay, so if this math holds, then the total crypto market would be 300 trillion. I'm not sure if that ratio will hold, but of course the argument still is true that networks that host a large share of tokenized activity, and this is from Grayscale, is going to capture the economic value. So if the total market's 300 trillion and crypto's a $2 trillion market today, I think crypto network value is going to be clearly above 2 trillion. And I published this before. It's just a list of things that agentic AI, why they need to run on crypto. You can actually pull this up from our presentation, which I'm sure will be available after I speak on the Bitmine website. Okay, so what does this all mean? Well, I think it means that the banks of the future are going to be replaced by DeFi and crypto native companies. And let me give you an example. The most profitable bank in the world today is JP Morgan, which is projected to make $60 billion this year, which is a huge number, and they need 300,000 employees to do that. But let's mix in Tether and Jane Street. So Jane Street is a crypto trading firm. Okay, they move money just like banks move money, but they're specialized in moving money very quickly using computerized system. Well, they made $40 billion last year, which is almost as much money as JP Morgan, but with only 3,000 employees. Okay, so in other words, like, they're much better returning profit per employee or return on invested capital. And then take a company like Tether, which only has 300 employees, and they made $15,000. So the way I would look at it is that if you combine Tether and Jane Street, you'd have more profits than JP Morgan and only 3,300 employees. But the point I'm making here is that native digital companies using blockchain as settlement eliminate a lot of processes and people, and then they end up making a lot of money. So in 10 years, my guess is half of all the largest financial institutions in the world will be native digital. It's not a stretch. The reason it's not a stretch is take every industry. I mean, imagine like when the internet came and someone said, here are the biggest newspaper companies. In 10 years, these will still be the same. The legacy, it obviously wasn't. They were all replaced. If you took media, the same thing. All these media companies in the digital world lost market share to companies like Netflix. And of course, I saw this in telecom, which is where I spent most of my career, where the wireless companies became the most important businesses, much bigger than the legacy telecom systems.
Why is this cycle different? Because Ethereum is no longer just a speculative asset. It is becoming the future of money. Number 1. The AI synergy. Industry titans like Elon Musk and LinkedIn's Reid Hoffman are pointing toward a future where the primary scarce resources are compute and energy. In a world dominated by AI, these AI agents will need a medium of exchange. Crypto is the native currency of the digital world. 2. The tokenization revolution. Larry Fink of BlackRock and reports from Grayscale suggest we are heading toward a $300 trillion tokenized market. Everything from real estate to treasury bills is moving onto the blockchain. 3. Critical mass. We've already passed the point of no return. Stablecoin volumes on blockchain networks have now exceeded Visa's payment volumes. The infrastructure is built, the volume is there, and the Layer 1 networks that host this activity, primarily Ethereum, will capture the lion's share of that $300 trillion value.
I want to talk about Crypto Spring and why I believe Ethereum is the future of money. Here are some disclaimers. So let's start with why I believe Crypto Spring is here. I know that many of you believe we're still in a fog of war, and it is indeed true the US is in the midst of a conflict with Iran. But what you have to focus on is that Ethereum has now risen for 3 months consecutively. And in fact, if Ethereum closes May above 2100, that would be the 3rd consecutive month. As I'm highlighting here, there's never been a crypto winter where Ethereum has closed up 3 consecutive months in a row. In other words, the fact that we're up 3 months in a row means crypto winter is over. Another way to think of this is to look at software stocks in Ethereum. Both have been highly correlated to each other. And as you can see, software stocks have risen along with Ethereum. In fact, at Fundstrat, software is now among our top sector picks as of May 1. So that gets us to some facts that Ethereum is the best performing asset since the start of the Iran war. It's performing as a wartime store of value. And here's the thing. It's been a great diversification tool since 2016. Take a look at this first column that's highlighted. Let's look at different allocations you could have done in terms of owning Ethereum on December 31, 2016, from 0% all the way to 33%. And these are the starting dollar value. So if you had $100,000, for instance, and you put 5% into Ethereum, that was $5,000 invested. This highlighted column is what it would be worth today. So your $5,000 investment would have grown to 1.5 million. In other words, if you compare that to having 0 allocated to Ethereum, okay, and you look at your total portfolio today, it's 230,000 if you had no exposure to Ethereum versus 1.7 million if you had 5% allocated to Ethereum. In other words, you had a 7 times increase in your total portfolio with just a 5% exposure to Ethereum. Now, another way to think of this is how much of each asset would you need to own to protect yourself against a 50% decline in the S&P 500? Okay, so this is the required hedge. You would need just 0.4% 10 years ago in Ethereum to protect yourself against basically a wipeout in the stock market. Gold, which is considered a store value, you'd have to have 37% of your portfolio. So you can see the point here. You'd want to own just a small piece of Ethereum as a source of diversification and as a hedge. Now, Ethereum does track Bitcoin, so I think you should look at the price ratio. And the current price ratio is below not only the 8-year average, but the 2021 high of 0.087. And you've seen this chart from us before. If Bitcoin gets to 250,000, which we think is fair value in the next 12 months, and Ethereum gets to the 8-year average of the price ratio, that's 12,000 Ethereum. That's a lot of upside from here. If it gets to the 2021 high, that's 22,000 Ethereum. Keep in mind, those are two numbers to watch. And if ETH becomes the payment rails of the future, which we believe is the case, that would imply $62,000 Ethereum. So clearly a lot of upside from here. And Ethereum is exiting a long consolidation, something I've talked about before. And you can see this current consolidation is 5 years. But those other consolidations resulted in pretty explosive upside moves. 227 times after the 2016 consolidation, and after the 2020 consolidation of 54x for Ethereum. So I think this next upside is going to be led by tokenization and agentic AI.
The narrative is shifting from the fringes of finance to the very center. When the CEO of the world's largest asset manager, Larry Fink, talks about a new asset class based on futures of compute, he is describing the ecosystem Ethereum has spent a decade building. We are seeing a grand unification of AI agents and crypto. These agents won't use dollars. They will use programmable, borderless, and instant digital assets. As the consolidation phase nears its end, the crypto winter fatigue will be replaced by a massive supply shock as institutions realize that Ethereum is the settlement layer for the new global economy.